Ladies and gentlemen, please welcome Karen Capuccio, Susan Chapman, Andrew Giordano, Maxine Given, and Patricia Nelson.
Good afternoon. My name is Patricia Nelson. I am a retired nurse home assistant from Waukesha, Wisconsin. Nearly 2 years ago, health-ish forced me to move closer to my family. I went to a payday lender to borrow $550 to help pay for moving expenses. The loan was due in full the next month. I couldn't afford to pay the full amount of the loan on my monthly disability income. So I made the monthly finance charge. For 22 months, I continued to pay the finance charge at the beginning of every month on time. In total, I paid over $2,700 in interest. Not a penny of it went to pay down the original $550 loan. I was caught in the debt trap. I was caught in a debt trap of predatory lending. I know I am not alone. All of us on stage have shared our story with the president, and we need greater consumer protection on predator loans. Now, it is my pleasure to introduce our president, Barack Obama.
Thank you so much. Thank you, everybody. Thank you so much. Please. Thank you very much. Thank you. Everybody, please be seated. Thank you. Patricia, thank you so much for sharing your story and doing such a wonderful job. Good afternoon, everybody. Before I start with my remarks, I want to acknowledge some people who've been working diligently on this issue, in some cases for years. First of all, our Secretary of the Treasury, Tim Geithner, is here. Christina Romer, the chair of, there she is, of my Council of Economic Advisors is here. Senator Danny Akaka from Hawaii, Representative Steve Driehaus of Ohio, Representative Walt Minnick of Idaho, Representative Paul Kajorski of Pennsylvania, Representative Al Green of Texas, Karen Mills, our outstanding administrator of the Small Business Administration, Sheila Bair, who's been doing a heroic job trying to deal with the banking situation as chairman of the FDIC, Mayor Michael Nutter of Philadelphia, and my National Economic Advisor, Larry Summers. And finally, we've got some special guests, some of the finest attorney generals who are fighting against consumer fraud and have been dealing with some of the consequences of the issues that we're discussing here today. I'm proud to have them here. My former seatmate in the Illinois State Senate, Attorney General Lisa Madigan, Andrew Cuomo of New York, Martha Coakley of Massachusetts, and Roy Cooper of North Carolina. Please give them all a big round of applause. Now, for the last several months, this administration has been working with Congress to reform an outdated system of financial regulations and lax oversight that helped lead to last year's crisis. And I want to thank some people here who are working tirelessly on this issue. First of all, Chairman Chris Dodd of the Senate Banking Committee, Chairman Barney Frank of the House Financial Services Committee, Richard Shelby, also of the Senate Banking Committee, for the leadership and enthusiasm that they have shown throughout this process. Now, part of our reform effort involves putting in place new safeguards that would help prevent the irresponsibility and recklessness of a few from wreaking havoc on our entire financial system. We want to close gaps in regulation, we want to eliminate overlap, and we want to set rules of the road for Wall Street that make fair dealing and honest competition the only way for financial firms to win and prosper. But a central part of our reform effort is also aimed at protecting Americans who buy financial products and services every day, from mortgages to credit cards. It's true that the crisis we faced was caused in part by people who took on too much debt and took out loans they couldn't afford. But my concern are the millions of Americans who behaved responsibly and yet still found themselves in jeopardy because of the predatory practices of some in the financial industry. These are folks who signed contracts they didn't always understand, offered by lenders who didn't always tell the truth. They were lured in by promises of low payments and never made aware of the fine print and hidden fees. Now, Secretary Geithner and I just finished meeting with some of these Americans who've joined us here today. And you've already heard from Patricia, who was forced to pay thousands of dollars in interest on a $550 payday loan. And we also had a chance to hear from Susan Chapman, who had excellent payment history until she was contacted by a broker who told her that she could lower the monthly payments on her mortgage. Instead, the loan they sold her ended up increasing her debt, and her principal has now gone up $20,000. We talked to Karen Cappuccio, who is still fending off foreclosure because her mortgage company duped her into taking out two expensive loans when they had originally promised her one low fixed-rate mortgage. We talked to Maxine Givens, whose bank hit her with 4 separate overdraft charges because of one mortgage check that they ended up rejecting the very next day. And I should add, by the way, that this is a CPA that we're talking to here. So if it's happening to her, if it's happening to Maxine, then imagine what the rest of us who can barely add are dealing with here. We talked to Andrew Giordano, whose bank made a mistake that cost him $800 in overdraft fees. And when he caught their mistake, the bank only refunded part of the fees. As we've seen over the last year, abuses like these don't just jeopardize the financial well-being of individual Americans, they can threaten the stability of the entire economy. And yet the patchwork system of regulations we have now has failed to prevent these abuses. With 7 different federal agencies, each having a role, there's too little accountability, there are too many loopholes, and no single agency whose sole job it is to stand up for people like Patricia, Susan, Maxine, Andrew, and Karen. No one whose chief responsibility it is to stand up for the American consumer and for responsible banks and financial institutions who are having to compete against folks who are not responsible. So under the reforms we proposed, that will change. The new Consumer Financial Protection Agency that I've asked Congress to create will have just one mission: to look out for the financial interests of ordinary Americans. It will be charged with setting clear rules of the road for consumers and banks, and it will be able to enforce those rules across the board. This agency will have the power to make certain that consumers get information that is clear and concise, in plain language, so they can compare products and know exactly what they're getting themselves into. It will ensure that banks and other firms can't hide behind these ridiculously confusing contracts, pages and pages of fine print that nobody can figure out.